I'm Bob House. I lead the Business for Sale group at CoStar. We operate the leading marketplaces for businesses for sale, BizBuySell and BizQuest, and Find a Franchise. I'm joined today by Michael Bauman, who is the founder and CEO of YourSBA.com and also an advertising solution partner of ours. And Michael, welcome and thanks for sharing your knowledge and expertise around SBA acquisition financing. Would you please introduce yourself and tell a little bit about yourself and your company?
Yes, hi Bob, thank you, and Brendan, thank you very much. My company, YourSBA.com, operates an online platform called Edge, and we help buyers pre-qualify for SBA loans and find a qualified loan structure for SBA loans as used for business acquisitions. So our platform builds the initial forms and project overview to be reviewed by one of our partner lenders once we have a qualified structure, and our system provides instant feedback to the borrowers on the structure and provides messages that guides them through finding the qualified structure. The US government, the Congress and the President gave some directions to the Treasury to help stimulate the economy, and one of the main vehicles they're using to stimulate the economy is the SBA program, and specifically the SBA 7A loan program. So the thank you. The CARES Act allocated $17 billion to the SBA to pay 6 months of payments, as Bob said earlier. I'd like to start by telling you a little bit about SBA loans. SBA loans make it easier for a bank to lend money by providing a government guarantee to the bank for a large portion of the loan. Therefore, this reduces the risk for a bank when making a loan to a small business. So because there is reduced risk and because the SBA is a highly regulated environment, the loan terms are more favorable with a lower interest rate. Today, the maximum interest rate is 6%. The typical loan term is for 10 years on a business acquisition loan, and there is no prepayment penalty if you choose to pay off the loan prior to 10 years. Most banks and credit unions are authorized SBA lenders. We work with a small group of large banks that are very active in the business acquisition lending space. The business acquisition lending space is the most complicated type of SBA loan, so it's important to be working with a bank that knows how to get these done. I like to call the 7A loan program the Swiss Army knife program of the SBA. It is the most flexible program and is able to be used for a lot of different things. One is buying an existing business. Another is buying out a business partner. Also, a 7A loan can be used for working capital and any combination of these uses with any other combination of these uses to expand the business by purchasing equipment, hiring employees, and pretty much any other business use. If a small business occupies more than 51% of a commercial building, the SBA 7A loan can even be used to buy the building with a longer loan term, 25 years, and if you're combining a business acquisition with a building purchase, there can be a blended loan term somewhere between 10 and 25 years. So SBA loans have very favorable terms for the borrower. So why would you choose an SBA loan? Well, you can borrow up to $5 million with the 7A loan. As I mentioned on the previous slide, there are lower interest rates than any other loan I know of. So yesterday, the Fed chairman indicated he was not thinking about or even thinking about raising the current Fed rate, and indicated maybe in 2023. So we're looking at a 6% maximum rate as of today. The down payment for a business acquisition loan can be as low as 10% per the SBA rules, and the typical loan term for a business acquisition is 10 years. And there are practical requirements. So we're going to look at the practical borrower requirements, and then the practical business requirements for obtaining an SBA loan. So in this, during the pandemic here, this is not the time for a buyer with, without some resources to to buy a business to get into the game. So I looked back through all of the projects we've been involved, almost all the projects we've been involved with for the past year. I tried to come up with sort of a minimum threshold that we need, that we see being approved by banks. And that number is $70,000 cash. And if it's not cash, it needs to be very liquid, such as stocks or property that can be sold, or we do see people buying businesses and selling properties to get that down payment, something like this. This is just not the time to be entering this business acquisition structure if you don't have at least $70,000 available to you. We specialize in loans over $350,000, where we look for at least 10% from the buyer. The lender may ask for more than 10%, but there are ways we can accomplish both. I'll get into that a little bit later. For franchise purposes, plan on 10% down. And if you're looking for a loan of less than $350,000, plan on a 20% down payment minimum. The down payment sources I've put in order of what we see here. The most common source we see is cash. Cash is king, and it is the most common source of down payment. A second comes from retirement funds, such as a 401k, and you can also use equity in your home as a down payment for an SBA loan. You cannot borrow a down payment for an SBA business acquisition loan, but you can use the equity in your home in the form of a home equity line of credit or HELOC as that down payment. We also often see gifts from family and friends, most usually family, to provide the down payment, and we do see that quite often. The credit score, a lot of people ask me this question. Credit score is not technically a factor with SBA loans, but a good credit character and personal credit history is important. So a one-time blip in your credit from a divorce or a medical issue, or even trouble that you might have had during the Great Recession, we can get over these, but habitually skipping credit card payments and skipping out on bills is not going to be very good for the borrower when it comes to the bank credit decision. On the business side, the qualified business that you can purchase with an SBA 7A loan, it must be small by SBA standards. And as a general rule, I would say less than 500 employees and less than 25 million in annual revenue. There are exceptions to this, and there is a table available on the SBA website that can go into quite a bit of detail on this, but just plan on 500 employees or less and under 25 million a year. The business must be a for-profit business and not a nonprofit entity such as a school, as an actual example that we had. And if you're a for-profit school, which we actually had submitted in the last hour, we are able to facilitate a 7A loan for this particular school because it is a for-profit school, but you must be a for-profit business. The business must be based in the United States, and it must have positive cash flow so that the monthly SBA loan payment can be made plus the new owner benefit. So if they need to take a salary, any owner benefit. The business must not have been dramatically impacted by COVID-19, and if so, it must have a strong recovery plan. So I'm seeing, and I've looked back through the transactions since March, I see half of the business that come through our platform having been negatively impacted by COVID-19 and on a recovery path, and half of the businesses have been performing well or even better during the pandemic. So I'm seeing exactly half and half of businesses that have been and have not been affected by the pandemic. And I'm about to show you a real world example of just such a business that we completed in the last 45 days or so. In addition, the business must not derive a majority of its revenue from lending money, and it cannot be a federally prohibited business such as a hemp farm or cannabis related business, and it cannot be in an adult oriented industry. So what does the CARES Act mean for SBA loans? I was getting ahead of myself a little earlier. On March 27th, the CARES Act was signed into law and allocated $17 billion to the SBA, the Small Business Administration, for the purpose of subsidizing SBA loan payments, basically a stimulus to the economy through and using the SBA. The SBA will pay all loan payments directly to the bank, including principal and interest, and you will see that it will also pay fees. These are not the SBA guarantee fees. These are small lender fees for collection of payments, very small fees that the lender adds as if making another sort of payment. So principal plus interest for a period of 6 months, with 6 months forgiven, not deferred, as Bob said, but this is a gift from the SBA. It's being paid by the SBA to the lender for six loan payments or 6 months. And this program is for loans closed between March 27th and September 27th of this year, beginning with the first loan payment or within 30 days, whichever is earliest. Here we go. Okay, so let's look at a real world example. This is an online business completed recently. The business was purchased for $450,000. The total project cost was $500,000. So the business was $450,000. The lender added $30,000 for working capital. Working capital can be used for such things as rebranding, adding touchless payment systems, all sorts of things. $20,000 went to SBA closing costs. The closing costs, including the SBA guarantee fee, which is what funds the SBA loan program, and other miscellaneous fees to close the loan, just like the fees you have when financing a house or a car. The total equity injection for this transaction was $100,000, 10% or $50,000 from the buyer, and the seller agreed to participate in the financing in the form of a seller note on standby for 2 years. The note is only on standby for 2 years, not 10 years. In this case, the seller agreed to a $50,000 note with reasonable terms to the buyer. And this $500,000 project cost minus the down payment of $50,000 and minus the seller note of $50,000 leaves us with a $400,000 SBA loan. So another way to review the structure is in the actual table that was created by our platform. It shows the business acquisition of $450,000, the working capital $30,000, the loan closing costs of $6,000. And those costs are things like business valuation, title searches, legal fees, etc. The SBA guarantee fee is here. That entire amount is paid to the SBA by the lender to partially fund the SBA loan program. So to the right is the down payment of $50,000 and the seller note of $50,000. And on the bottom is the loan percentages and the SBA loan of about $400,000 on the right. So how does the CARES Act offset a business acquisition down payment? This online business will realize approximately $116,700 gain over the first 6 months of ownership. The business cash flow is about $180,000 per year. Divide this by 2 to get 6 months of benefit is $90,000. The SBA will make 6 months of payments, which are $4,450 a month, $4,450 a month directly to the bank for the borrower. This is a $26,700 benefit. There are also costs over this same period. The new owner is paying herself $120,000 per year, which is $60,000 over the first 6 months. And there is the $50,000 cash down payment she just wired to the bank a few months ago, $60,000 salary over 6 months, plus the initial down payment of $50,000 adds up to $110,000 of cost. So over the first 6 months, subtracting these costs from the gain of $116,700, she will net positive about $6,700. So this essentially eliminates her initial down payment outlay. So the SBA stimulus is not going to be around forever. And I have a very conservative timeline here that I did earlier for an article. But if you wish to close your loan before September 27th, you need to find a business, make an offer, have the offer accepted, get approved for financing. The loan needs to be underwritten, and you need to close the loan all before September 27th. September 27th is a Sunday, so realistically, Friday, September 25th. I tell people it takes 45 to 90 days to close the loan. Most lenders say 60 days. If a lender says less than 60 days, be very cautious, as there are a lot of moving parts to a business acquisition loan, lots of documents from the seller, the buyer, bank asks for documents, underwriting, closing, inevitable unforeseen delays in the process because we're all human and things come up. So plan on having at least 60 days to close the loan. So if you take September 27th and back up 60 days, you would get the end of July. So say the third or last week of July is really the last time you can have all of your ducks in order to have this loan closed by September 27th. The lender will work with you as much as possible to get the loan closed within 60 days. Everybody wants to see the loan closed, but just plan on it taking at least 60 days to get the loan closed. So my time is a little conservative here and might need to be adjusted, but if you get started toward the end of July, you should be in good shape. Got to find the business, sign the purchase agreement, get pre-approved for the loan, go through underwriting and close the loan by September 27th. So how is the CARES Act driving deals? What are we seeing in our platform and with our banks? Remember that owners that have done well with businesses, running small businesses, built them up and have them for sale, they are selling these businesses so they can get the cash to buy bigger businesses. So using the cash they're getting out of this business, it might be selling as a down payment on a bigger business. And they need to close their loan prior to September 27th. So these sellers are motivated to get you moving because they have to close their loan by September 27th as well. And I have found that the negotiations are going a little friendlier and a little faster when all parties are aware that the buyer needs to close the loan by September 27th. So sellers, business brokers, buyers, we all want to take advantage of this 6-month loan payment forgiveness by the SBA. So for example, a liquor store we did in Central California, the bickering back and forth over a few $1,000s in liquor inventory just didn't matter anymore because the buyer needs to get it closed by September 27th. The owners who were close to retirement and really didn't want to deal and don't want to deal with post-COVID-19 requirements and uncertainty are taking advantage of this 6-month payment forgiveness incentive to get the price they were hoping to get before the pandemic, and this incentive is a push over the finish line for them. Thank you, Bob.
The last thing I want to leave you with before we turn it back to a couple more questions is our Finance Center. So if you go to our site and if you see the navigation at the top under Tools and Advice, one of the options under that is Finance Center. And here you can come and learn more information about SBA business acquisition loans. And you'll see at the bottom of this page there's additional articles, and we're going to be adding to this. In fact, we discussed adding an FAQ based on this webinar to this section. And so, but there's articles and information here about the benefits of the SBA loans and you know, requirements and the like in the CARES Act. So you can read up more if this topic interests you. You can also get pre-qualified here. So if you use the form on the right there, make sure you found a business that you're ready to buy, that you meet those characteristics that Michael outlined. You've got the $70,000 liquid cash, that the business is a small business under the terms that the SBA will lend against, and then use this form to find out if you pre-qualify. Basically, there's just basic information about yourself, about the project, and you can very quickly get an answer back of whether this will work for you. Again, here's the URL for that, bizbuysell.com/finance-center.